Hey everyone, I'm Laura Adams, the host and voice behind the Money Girl podcast since 2008 and the author of Money Girl's Smart Moves to Grow Rich. My mission is to help you live rich and love the journey. If you're a new listener, welcome to the Money Girl community. I'm really glad to have your ears and want to thank you for downloading the show. If you've been listening for a while, I really appreciate your loyal support. And you know that this show is much more than just a podcast. Each episode is a mini training. I cover a wide variety of topics like credit, debt, investing, real estate, business, taxes, insurance, money management strategies, and a whole lot more. Today's topic is going to be of interest to you if you work from home, maybe you're a remote employee, or you work for yourself, or maybe you want to work from home someday. This show is definitely for you. There are lots of opportunities to work from home, and it's becoming more and more common. I've worked from home either part-time or full-time like I do now over the past decade, and I've always had a home office and taken advantage of the home office deduction. So this is something I know can save a whole lot of money. So if you are not claiming a home office deduction and you're entitled to do it, you're definitely leaving a lot of money on the table. So beginning with the 2018 tax year, unfortunately, fewer taxpayers will be eligible for home office deductions under tax reform, under the Tax Cuts and Jobs Act. So in this podcast, you're going to learn what tax reform did and didn't change about claiming a deduction when you work from home. To find the notes for this show, plus the full archive of podcasts, just visit the Money Girl section at quickanddirtytips.com. You'll look for this episode, which is number 536, called Work from Home, Tax Reform Changes to the Home Office Deduction. The first thing you need to know about a home office deduction is that getting a deduction is treated differently depending on whether you work for yourself or for someone else. So we'll start with how tax reform affects deductions for W-2 employees first. So as I mentioned, beginning this year, there are a lot of changes. The key thing for employees is that if you are a remote employee who works from home, you are no longer eligible to deduct unreimbursed job expenses, including the cost of a home office. So if you've grown accustomed to writing off a variety of expenses related to your job, it's time to kiss them goodbye. You can still claim valid expenses for last year on your tax return. So if you've had valid expenses for 2017, you can still claim them on the 2017 tax return, so don't miss out on those. But going forward for 2018, they are not allowable. Prior to the Tax Cuts and Jobs Act, workers could deduct job expenses that were not reimbursed by their employers. Now, you couldn't deduct all of them, but you could claim a total that added up to more than 2% of your adjusted gross income. And deductible expenses included any, quote, ordinary and necessary cost to do your job or improve your job skills. So some of the expenses that you could deduct previously before tax reform included things like subscribing to a trade magazine, attending a conference, buying protective clothing, paying union dues, buying tools for your job, driving your vehicle, paying for travel, lodging, and meals, working with an employment agency to find a new job, and using any part of your home for your work. These are just a few examples from a very long list of eligible expenses that under the old rules allowed employees to deduct when they shelled out for them, but they didn't get reimbursed by their employer. So any expense that helped you do your job, including the cost of maintaining a home office, was fair game for a deduction. So going forward, unless employers choose to reimburse workers for some of these common costs, the elimination of this deduction under tax reform is a big blow to employees with job-related expenses. Let me give you an example of the savings that you could miss. Let's say you earned $100,000 last year and you had $5,000 in unreimbursed job expenses. So if that were the case, you can only deduct the amount that exceeds 2% of income. So you could deduct $3,000. Now, if you paid an average tax rate of 20%, that $3,000 deduction would have saved you $600 in taxes. And so going forward, you're not going to get that savings. Now, while it's true that under tax reform, the standard deduction has nearly doubled to $12,000 for singles and to $24,000 for joint filers, if you're an employee who pays a lot of job-related expenses out of pocket, you may not come out ahead. So if you are somebody that does have a lot of job-related expenses, you might want to consider asking your company for some options to offset the costs that you've got to pay to be successful in your job, especially if you maintain a home office for their convenience. Okay, so now that you know that employees are no longer able to claim a home office deduction, let's switch gears and cover how claiming a home office deduction works when you work for yourself, when you're self-employed or run a small business from home. I have good news on this front. The good news is that if you're self-employed or running a business from home, tax reform did not change your ability to deduct home office expenses against your business income. So nothing changed for you if you are a business owner or you're self-employed. You can still claim the cost of a home office as business expenses using Schedule C. That's the form that allows you to calculate profit or loss from your business. So the only taxpayers affected are employees who work from home, not business owners and those who are self-employed. I want to make sure you understand that. However, the same strict limitations on who can claim a home office deduction in the first place still exist, so we'll cover those. And to help do that, I'll answer a question that I received recently on this topic from Sandy N., who says, I have a part-time business selling on eBay. I work at home and store all my inventory there, but in different rooms. Do I qualify for the home office deduction? If so, how would I calculate it? And do I need a tax ID number? Thanks for your question, Sandy. Okay, back to Sandy's question about whether her part-time eBay business makes her qualified to take a home office deduction and if she needs a tax ID number. Sandy, you do not need a tax ID number to have a business or to claim valid tax deductions. If you use part of your home exclusively and regularly to conduct your business, even on a part-time basis, you are qualified to deduct home office expenses. You can include both the space that you use to work plus your inventory storage spaces in your deduction calculation. I'll tell you more about how to do that in a moment. You can even take a home office deduction if you work in other locations occasionally, like maybe you meet people in a coffee shop or you visit other businesses. And you can claim a home office deduction no matter if you rent your home or own it. So for all you renters who are listening, make sure that you are taking this deduction if you're qualified for it. So let's talk about how to calculate the deduction. The deduction amount that you can claim depends on the type of calculation method you use and the types of expenses you have. There are two ways you can claim a home office deduction, just two ways, that's it. And if you're not sure which method is best for you, try both of them and then choose the one that saves you the most in taxes. So the first method is the original method. I call it the standard method. This requires you to determine the percentage of your home or your rental that's used for business. So what you do is you measure the total square footage of your home and the total square footage of your work areas. If you're not sure what your square footage is, you may have a blueprint of your home that could tell you, or a floor plan of your apartment. You might also see it listed in the tax records for your property. But if you can't find it, you can literally just pull out a measuring tape and actually calculate it. So what you're looking for is the total square footage of the areas where you work and where you have inventory versus the total square footage of the home. So you divide the business area by the size of your entire home or apartment. For example, if your home or apartment is 2,000 square feet and 400 square feet of it is your work and storage areas, That's 20%. You could deduct 20% of your expenses. So this method requires you to keep very detailed records of all your expenses. You're going to have to know each one of them individually to add them up and use this percentage. And you use Form 8829 to figure out the expenses that you can deduct. You also complete Schedule C, and you submit both of those forms when you file taxes. And I'll have links to those forms in the notes for the show. So that's the first and the original way. There's a new way called the simplified method. This one gives you a flat rate to deduct, and it's much easier to calculate than the standard method. You're allowed to deduct $5 per square foot of your home office areas. While this is really convenient, the problem is that the simplified method is capped at 300 square feet. So if you multiply that times $5 a square foot, that limits your deduction to $1,500. So if the business areas in your home are larger than 300 square feet, or your deduction would add up to more than $1,500, you're going to come out ahead using the standard method. If you use this simplified method, it really is simple because you don't even need to keep detailed records. All you do is measure the spaces in your home that are used for business and include that in the calculation on Schedule C. So you're probably wondering which home office expenses you can deduct if you choose to use the standard method. There are a variety of personal expenses that legitimately become deductible when you operate a business from home. And as I mentioned, maintaining records for the standard method is more of a hassle than using the $5 per square foot simplified method, but it may give you a much larger deduction. So, when you're claiming the standard home office deduction, you're going to need to keep track of two different types of expenses, direct and indirect. So, the direct expenses are those that are for your office only. So let's say that you start a side business like web design, or you're selling items on eBay like Sandy. If you create an office in your spare bedroom and you paint the room, you install carpet, and you install window treatments because you're going to be working in there a lot as your home office, those direct expenses are 100% deductible, no matter the size of the office. Now, the other type of expenses are indirect expenses. These are expenses for your entire home. The indirect expenses are the ones that you would have even if you didn't have a home office. So they're partially deductible based on the size of your office as a percentage of your home. Again, let me make sure you understand that if you have direct expenses that you would only incur because you've got a home office, those are direct. They're 100% deductible, but everything else is indirect. So the indirect expenses might include things like your mortgage interest payments, property taxes, rent, insurance, maintenance, and a security system. So let's say you're a renter, and if your rent, your renter's insurance, and your utilities total $2,000 a month, and 20% of your home qualifies for business use, that means $400 of your monthly bills would be deductible. Now, if you're a homeowner, taking the home office deduction gets a little bit more complicated because only a portion of your mortgage payment is deductible. You can't deduct the principal portion, so your mortgage payment is principal and interest and insurance and taxes. It's a mix of things in there. So you've got to separate the amount for interest. You cannot deduct the principal portion because that's the amount that you borrowed for the home. Instead, you're allowed to recover a portion of that cost each year through depreciation deductions and using a formula created by the IRS. So you can only claim mortgage interest, real estate taxes, home insurance, and depreciation as indirect home office expenses. And even if you don't use your home for business, let's say you've got an office outside of your home, you can claim the mortgage interest deduction as a homeowner. And that allows you to claim qualified mortgage interest and real estate taxes as long as you itemize deductions on Schedule A. However, claiming these as part of the home office deduction might be able to save you more in taxes because you shift them from an itemized deduction on Schedule A over to a more valuable business expense deduction on Schedule C. If you have expenses that are completely unrelated to your home office, maybe you're remodeling your kitchen or adding a pool, those are never deductible. And you typically cannot deduct exterior expenses like yard work or gardening, even if you regularly see clients or vendors where you live. Also note that costs pertaining to your business, which have nothing to do with your home office, let's say business insurance, things like a computer, office supplies, those are fully deductible as ordinary business expenses. They're 100% deductible no matter where you run your business or where you work when you're self-employed. So, how you deduct an expense and how much you can deduct depends on whether it benefits the entire home. That's the indirect expenses, so maybe electricity and water, or whether it's just for your office portion of the home. Those are the direct expenses like painting that area. Or if it's just a business expense like a computer or software. But note that you cannot deduct more expenses than the amount of your business's gross income. So if your business income is less than your expenses, your deduction for certain home office expenses will be limited. But you may be able to carry over the excess to the next year. So you can probably tell that the rules for claiming tax deductions on your home office and your business can get a little complicated. You can refer to IRS publication 587 for more details, but I would really recommend that you consult with a qualified tax accountant to help you save the most money possible when you're working from home or have anything complicated in your financial life. So Sandy, thanks so much for sending in your question. I hope this helps you understand a lot more about the home office deduction. If you've got a money question or suggestion for a future show topic, please send me an email. You can use the contact page at lauradadams.com. And you can also join my Dominate Your Dollars private Facebook group to interact with me and a huge community of people who are taking their finances to the next level. And I'd love for you to check out my new online class called Get Out of Debt Fast, a proven plan to stay debt-free forever. Hundreds of students in over 16 different countries have joined me in this best-selling online class, and I'd love for you to join me as well. You'll come away with a clear debt reduction plan to eliminate credit cards, student loans, medical bills, mortgages, or any debt that you owe, even if you don't have extra money to pay them off faster. To learn more, just send me a text. Text the phrase DEBT COURSE, DEBTCOURSE, to the number 33444, and I'll send you an email that gives you 85% off. That brings the cost of the course to under $30 for a limited time. Check it out, and I hope to see you in class. That's all for now. I'll talk to you next week, courtesy of Money Girl, your guide to a richer life.